Welcome to Hubfx Market Report. World shares edged higher on Tuesday as investors mulled whether a recent rally in stocks has legs to run further, while Treasury yields drifted higher as traders paired bets that U.S. rate cuts are on the horizon given sticky price pressures. Wall Street, where the S&P 500 touched a near 10-month high on Monday, was in the black. The S&P 500 index rose 0.1%. The Dow Jones Industrial Average was little changed, and the Nasdaq Composite Index climbed 0.25%. The Pan-European Stocks 600 Index rose 0.38%, while MSCI's broadest index of Asia-Pacific shares outside Japan was little changed. That left the MSCI's broadest index of world stocks up 0.21%. With major share markets all in the black, investors might think that stocks are set to rise further. Yet some analysts warned investors against false optimism. The two-year Treasury yield, which typically moves in step with interest rate expectations, rose to 4.5%, while the yield on 10-year notes inched up to 3.7%. Government bond yields, a proxy for borrowing rates, eased earlier after an ECB survey showed Eurozone consumers had lowered their inflation expectations. British retail sales growth also slowed to a 7-month low as soaring food prices prompted shoppers to rein in spending on non-essential items, but that contrasted with the overnight action from down under. Australia's central bank hiked rates by a quarter point to 4.1%, an 11-year high, and warned that further increases might be required to ensure inflation is brought back under control. That pushed up the Aussie dollar and set the bar for a slew of key rate decisions elsewhere in the next couple of weeks, starting with Canada on Wednesday, which could also squeeze in another hike. The last few months have been completely distracted by the banking crises and the U.S. debt ceiling issue. But now we are very much back to the macro dynamics driving central banks and where their terminal rates are going to be. The U.S. Federal Reserve, the ECB, and Bank of Japan all hold meetings next week. Data on Monday showing the U.S. services sector barely grew in May has left markets pricing in an 82% chance of the Fed taking a pause in its rapid hiking cycle, a sharp jump from a 36% chance a week earlier. The dollar index managed to nudge higher, up 0.17%. The euro slipped 0.26% to back under $1.0684, while the yen was steady at 139.675 per dollar, and sterling fetched $1.2423, flat on the day. That's all for today. Thanks for listening. We'll see you next time.